Thursday, August 3rd, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to talk about Poland. Yes, Poland. I don't think I've ever spoken about Poland on the channel. Maybe to do with the BIS during World War II. But Poland has been accumulating a lot of gold. They're one of the biggest gold buyers, the Polish Central Bank, for 2023. And I'm going to give you my opinion on what it means for Poland and look a little bit at Polish history. Before I do, though, just like to say that I saw a comment yesterday on the video from yesterday on the comment section. Someone said, "Oh, Mario, can you show us your golf swing?" And so I've decided to put a clip on after this, and you can watch my swing. It's a very recent swing. And I'm going to put a little picture as well, a picture of probably me driving the golf ball back in 1991, and it was an amateur tournament in Switzerland, and I played for my club, and it was probably one of my best rounds, competitive golf. So here you go. So back to other things now, and you might be wondering why you're wearing a hoodie. Well, it is summer in England, but it's quite chilly still. But this is an interesting hoodie, though. It's the World Enslavement Forum hoodie. And it's a play on words, of course, with the World Economic Forum. And I found that on Twitter a few weeks ago. And it's from a website called Wide Awake Clothing, and I liked it. They have other memes or themes, and if you're interested, I have a link to them below in the description. So it's nice and comfortable. I bought it quite big so that it's I guess if you wash it, it might shrink, who knows, but I received it yesterday. And the World Economic Forum, just another point here, I've been noticing them, their agenda for many years, even before 2020. I try to warn friends years before that on Facebook, which, to be honest, I don't go on Facebook that much anymore. But I could see that they were pushing the climate policy or agenda, if you want to call it, back in 2017, 2018. And I try to warn people against that, but probably many people thought I was crazy. But also on my blog, I have a blog where I post some articles, not very regularly, but it's there. It's monaco64.net. And I wrote over 3 years ago on June 11th, 2020, the origins of the World Economic Forum go back to the Third Reich. So that's the way I've always felt about the WEF. And talking about the Third Reich, let's go back, let's go to Poland now. And I've always liked history. I'm not a history specialist, a Poland specialist, but I've known that in the last 200 years or so, Poland has had a tough time in terms of its sovereignty. And there is the old saying, of course, from Norm Franz, who says, "Gold is the money of kings, silver is the money of gentlemen, barter is the money of peasants, but that is the money of slaves." So I had a look here on Wikipedia at Poland. I know some of you don't trust Wikipedia, but you can get the general idea. Did you know that the Polish nation, really, and the Polish state was first founded with the baptism of Poland in 966 AD? So it's over 1,000 years old, so one of the oldest, probably very proud nation, I would say, from Europe. And unfortunately, they were partitioned. Here it says partitions of Poland, October 24th, 1795. And it reads, the partitions of Poland were three partitions of the Polish-Lithuanian Commonwealth that took place toward the end of the 18th century and ended the existence of the state, resulting in the elimination of sovereign Poland and Lithuania for 123 years. So up until 1918, that was, of course, the year that World War I ended, and Poland was given status of a state again by the Versailles Treaty. And of course, talking about the Third Reich, World War II was triggered by the invasion of Poland. There was the Polish corridor question, and we could debate that, but be as it may. And then Poland remained not an independent state, went back to being subservient to a foreign power, i.e. Germany. And then after World War II, communism set in, and it was a satellite state, really, of the Soviet Union. So Poland has been has had a tough time fighting for its sovereignty, and it is part of the European Union, but it has its own currency, the zloty, the Polish zloty. So I think the Polish nation, the Polish state, are very proud of their heritage. They're very protective of their sovereignty. So I saw this story here that was sent by Full of Hope. Thank you, Full of Hope, for sending me this story. I hadn't seen it, and it's from bullionstar.com, and bullionstar.com is a very good blog. And Ronan Manley as well covers the gold market really, really well. So the latest news is that Poland's 50-50 gold buying, 50 tons bought over 3 months, but another 50 tons to go. So let's quickly go through this article. And this shows, of course, that Poland really values its sovereignty, I think. We saw what Norman Franz said about gold being the money of kings. And a king is supposed to be a sovereign. And that's the way we should think as well. We are our own little kings and queens in our own house. So we need sovereign money. We also need silver, of course, because silver is also money, I would say. So Poland's central bank, Narodowy Bank Polski, is officially the biggest central bank gold buyer in the second quarter of 2023, having accumulated a massive 48.52 tons of monetary gold between April, May, June of this year. This is the first time in nearly 4 years since the Polish central bank last bought gold for its reserves. The other thing I would say, aside from protecting its sovereignty with gold, maybe the Polish central bank is aware of something that's going to happen in the system, because a lot of other countries, of course, have been buying gold, especially back in 2022. It was the biggest net buying of gold since records began at the World Gold Council. So maybe the Polish central bank saw that and said, well, we need to get involved as well. This large concentrated buying by the NBP during the second quarter also puts the Polish central bank in third place globally for gold buying during the first half of 2023, behind China and Singapore. As a reminder, China claims to have bought 57.85 tons of gold during Q1 2023 and 45.1 tons during Q2, for a first half 2023 total of 102.95 tons. And I think they're probably accumulating a lot more gold, the Chinese, for the the state, for the Chinese state. It's not just being done by the central bank. It's been done by other, probably state-owned enterprises. Singapore claims to have purchased 68.74 tons of gold during Q1 2023 and a net 3 tons during the second quarter, for a first half total of 71.71 tons. So here's the interesting point that Ronan Manley makes. Poland, world's largest gold buyer in second quarter of 2023. So right now, Poland, according to Ronan Manley, has gold reserves of 277.14 tons, which represents right now about 9.4% of Poland's total reserve assets, and they're supposed to buy another 50 in the coming months. He does say though that they've been behind schedule because they've been announcing what they're going to do, the Polish central bank. So I thought that was very interesting. So it's not just the Asian and the global South and the BRICS that are buying gold, but also the National Bank of Poland. So the other interesting point here is how far Poland has come in terms of accumulating gold. So it's a recap from Ronan. He says Poland only held 23.2 tons of gold up until 1998, 721 ounces of which was invested lent to LBMA bullion banks. In 1998, the NBP decided to buy another 74.5 tons of gold, using the Bank of England in London so as to avail of opportunities to lend gold in London, a gold lending market. This purchase brought the NBP's gold holdings to 97.75 tons. Around the same time, the NBP purchases another 5.17 tons of gold, increasing its total to 102.9 tons. Nearly all of which was in name at the Bank of England but lent to bullion banks. Another 20 years passed, and suddenly the NBP started buying gold again. Over the 4-month period, July to October 2018, the Polish Central Bank bought 25.75 tons, bringing its total to 128.6. Then over the 3-month period, May to July 2019, the NBP came back to the market, buying a massive additional 100 tons of gold, using the gold services of the London Interbank Market and the Bank of England. Coincidentally or not, 2019 was also the 100th anniversary of the Polish zloty currency. So the centenary was a fitting year to buy and repatriate 100 tons of gold. The NBP even issued a gold bar-shaped gold coin to commemorate flying 100 tons of gold back to Poland, which you can see here. These, combined with the purchases of 125.7 tons during 2018-2019, were only officially announced by the National Bank of Poland on July 5th, 2019. At the same time, the National Bank of Poland announced that it would repatriate the 100 tons of gold purchased from the Bank of England back to Poland during 2019. So that's a good thing that they're repatriating the gold to Poland, mainly because the Bank of England, the bullion banks, the Fed, they use other people's gold to manipulate the value of gold. So if you hold a lot of gold, why would you want to do that? And maybe these central bankers from these less, let's say, influential central banks are starting to twig onto it, and they realize that to have a credible currency, they have to have gold, but the gold has to be at home, not at the Bank of England. So with that, let's quickly look at where the markets are this morning. Today we have the Bank of England meeting. They're expected to raise rates from 5% to 5.25%. I think that's still dragging their feet, so to speak. I think rates should be at least 10, if not 12 or 15%. If they really wanted to get the inflation out of the system, and by inflation I don't mean CPI, even though we use CPI as an indicator of where inflation is. Inflation, of course, is the abundant creation of currency and credit out of thin air that is only possible in the fiat currency system. And I'm afraid things are going to get worse. And what do I mean by that? Well, the Bank of England is going to eventually have to raise rates a lot higher than maybe it needed to. Like I was talking about 10 or 12%. It's going to end up where it's going to have to go to 20%, I think. And that's a shame, of course. But anyway, let's check the markets then. Spot gold is down $2, 1932.50. The low has been 1930.85 and the high 1939. Yes, it makes a lot of sense, doesn't it? The US is downgraded after the markets close on Tuesday, and then on Wednesday, the dollar rallies, gold and silver get smashed. It makes a lot of sense, but that's called management of perception economics, and it's been something that they've been good at doing. The powers that be, the people at the Treasury and the central banks, to control the perception that the dollar is worth something, the fiat dollar that is, because the silver dollar and the gold dollar will always be worth something. So for those of you who think, well, it's not worth having gold and silver, I would think again and maybe think about Poland, right? Silver is down 17 cents at 23.52. Low's been 46 and the high 88. The Dow futures is down 70 points. NASDAQ 100 futures down 102. The S&P 500 is down 15 points. And the FTSE is down about 67 points, just under 1%. To the currencies, sterling is down 0.1%, just below 127. The euro is down 0.2 at 109.18. And the dollar is unchanged versus the yen at 143.28. The dollar is up slightly versus the yuan at 7.20. Aussie dollar is down 0.17 at 65.26. And the dollar is up just over a tenth versus the Canadian dollar at 133.69. And the Kiwi dollar is down slightly at 60.70. To the commodities, yes, we saw commodities get hit hard, especially crude oil yesterday. So we're back below 80 in WTI. We're trading just around 79. It's down 0.5%. Brent is down 0.5% at 82.76. Platinum is down $3. It's trading around 920. And high-grade copper as well has been hit hard. We got back to around 4 recently. We're now at 383. It's down 0.5% as well. The bond market is looking interesting, and I think it's one of the reasons why we're seeing the stock market under pressure. Yes, and gold and silver under pressure because the algorithms think, oh, just because bond yields are going up, it means the Fed is going to have to raise rates and it's going to be bad for gold and silver. But I think the central banks are behind the curve, and eventually these algorithms and these program traders are going to work out that you want to be in gold. But anyway, this just gives you another opportunity to keep stacking, in my opinion. So yeah, the 10-year yield is, it's under pressure. The bond market, the U.S. Treasury market, 10-year yield is up 7 basis points overnight, which is fairly significant. we're at 415. I've spoken about this. The key level above is 4.3. I think that's the high after the low we saw in 2020 at 0.3 in terms of yield. So, and I did make a video a few days ago warning about that. I said the bond market will shock the world, and I still hold to that, even though there's some people who are now saying, oh, bonds are oversold, and they could be in the short term. But my view is that they haven't beaten the classical version of inflation. They might have gotten the CPI down slightly, but all the inflation in the system is still there. So let's continue here. Where is the 2-year yield then? Well, that's at 490. That hasn't risen as much as the 10-year. So what that means is that the curve is steepening and it's becoming less inverted. And don't forget, I think it was Charles Nenner who said that, yes, an inverted yield curve is an indicator of a possible recession, but the recession really only starts when the inversion disinverts and becomes neutral. So we could see it would be really something to behold in terms of volatility in all the asset classes if the 10-year were to rise sharply and actually meet up with the 2-year. That would be a signal recessions here. So we need to keep an eye on that. What about Japan? What's happening in the land of the rising sun? Well, the 10 years continue to rise. We made a high of 0.66 today. So yeah, as I said earlier, we're probably going to settle around 0.75, even though for some reason the Bank of Japan says their target is still 0.5, but they're going to be buying it if it goes up to 1%. Doesn't make sense at all. It just goes to show that the new governor is an academic and clueless about markets. Anyway, what about the UK? Little old UK. Well, the 2-year yield right now is at 505 and the 10 years at 450. So yeah, the 10 years picked up a bit. The 2-year hasn't. But we'll see what happens after the Bank of England meeting today. And I think they have a press conference as well. So with that, I'm going to wish you all a very good day. Take care. Bye.